Have you ever opened a chart and felt confused by all the lines and signals? Namaste. Today, we will simplify that confusion. Welcome to Key Technical Indicators for Smart Decisions. Indicators are not meant to scare you. They are simple tools that help you understand market behavior. This video is specially for women homemakers because if you can manage a home with planning and timing, you can also make smart trading decisions. Technical indicators are tools that are calculated using price and volume. They help us answer three basic questions. Is the market going up or down? Is the price strong or weak? Is it the right time to buy or sell? Think of indicators like kitchen tools. A pressure cooker or mixer does not cook by itself, but it makes cooking easier and faster. Indicators support your decision. They do not replace your thinking. The moving average is one of the most popular and beginner-friendly indicators. It shows the average price over a period of time. This helps us understand the trend. When price stays above the moving average, the trend is usually positive. When price stays below it, the trend is usually weak. Just like checking the weather before stepping out, the moving average helps you prepare before trading. RSI stands for Relative Strength Index. It tells us whether a stock is overbought or oversold. Think of it like this: when we eat too much, we need a break. When we eat too little, we feel weak. Similarly, RSI above 70 means the price may be too high. RSI below 30 means the price may be too low. RSI helps you avoid emotional buying and selling. MACD stands for Moving Average Convergence and Divergence. Do not worry about the long name. In simple words, MACD shows momentum. Momentum means the strength of price movement. When MACD lines cross upward, it shows increasing strength. When they cross downward, it shows weakening strength. MACD helps you understand whether a trend is gaining or losing power. Volume shows how many people are participating in a trade. Price without volume is like noise without meaning. High volume means strong interest. Low volume means weak interest. When price moves with good volume, the move is more reliable. Always remember, price tells the story, but volume confirms it. Many beginners make one mistake: they use too many indicators. More indicators create more confusion. Start with one trend indicator, one momentum indicator. That is enough to make smart decisions. Consistency and discipline are more important than complexity. Indicators are your helpers, not your masters. When used correctly, they reduce fear and increase clarity. If you can plan a household, you can plan your trades with confidence. Start simple. Practice regularly. Trust the process. Subscribe for more simple and confidence-building trading lessons. Share this video with every woman who wants to trade smartly without fear. Because smart decisions create confident traders.